Hello, folks. Welcome to State of the Market. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone today on Monday, April 28th, 2025. I'm going to start off by showing a few disclosures as usual, sharing a few links in the chat with some disclosures. Something of a kind of digestive sort of day today, chopping and filling after some interesting sort of patterns on the chart. Share some stuff with you in the chat. Remember, we talk about ETFs on this, so if you want to see the prospectuses, we have a link to the prospectus page. We're going to show the standardized returns of those ETFs as well. Let's go over here, first of all, to my TradeStation platform. We will look at our standardized returns of these ETFs. So I wanted to just kind of mention that, it is probably the busiest week in a while under normal circumstances, without a lot of uncertainty about things like tariffs and trade and stuff like that. This would be one of the bigger weeks in the period of time that we're in right now. We have on Wednesday morning, we have GDP for the first quarter, which will also have the PCE inflation report for March, both on Wednesday morning. And then Wednesday afternoon, we have Meta and Microsoft reporting earnings. And then on Thursday, we have Apple and Amazon after the bell and non-farm payrolls on Friday. So normally this would be a pretty active week. So you might want to go to tradestation.com, go down the page a little, and you'll see this article, Tariff Optimism's Earnings Revive Growth Stocks. So this is the article we did for today, kind of looking at the overall situation of things happening in the market. And we identify some different things in this chart and things here. But from my perspective, this is now the kind of market that is very kind of a lot of a trading sort of market, because the thing is that we can get all kinds of catalysts at any time from the White House. And I increasingly think that we do have the potential for some kind of legal decisions. There's now many lawsuits challenging the tariffs in different ways. And most people or traders probably don't really pay that much attention to how exactly the courts work, unless maybe you are a lawyer. But there's things when they can issue like emergency injunctions, or they can fast track cases or dismiss cases or whatever they do. And it can be really complicated to actually know what the actual story is, because sometimes it's a decision and then an appeal. And I mean, it can get really complicated. But the thing is, I think we just have to realize we could get some kind of market moving news from the judiciary on tariffs at any point now. So it adds even more uncertainty. It could be something Trump says. It could be something Bessent says. It could be something that other guy says. Hassert might pop up and say stuff. And then you might have the Supreme Court or some other major court issue some kind of statement. So there's a lot of things now that really we have to realize that this is very difficult from a purely normal kind of technical trading sort of environment. I also mentioned we have a few things that are interesting. I want to actually just quickly remind you guys, this is my workspace that I use for this State of the Market webinar, but we do our on Thursdays we do market trends, and want to remind you that this tab is the same in market trends. We have a workspace we share with you guys in those Thursday webinars. There's actually a link. Also, if you look, right here, this is the article we did. And in this article, there's a link to the workspaces and stuff. So if you're curious here, you can actually there's an earnings tab, and you can do something like go to add symbol list, NASDAQ 100. Want to just remind you guys, this is the busiest week of earnings season. More than 110 members of the S&P 500 are reporting earnings, including Meta, Microsoft, Apple, and Amazon. So pretty active week. And if you want to be planning for it, you know what? I turned off my TradeStation because sometimes live stream, if you go to data, add symbol list, NASDAQ 100, it'll bring that data in. I turned off my live streaming right now because I used the other charts for that. But remember, we do have that functionality built into the workspace, and this would be a good week potentially to think about using that, because it is the busiest week of earnings season. So one of the other things we talked about last week, we talked about this big spike of companies above their 20-day moving average. We talked about the kind of improvement in breadth and things like that. And we said that after periods like that, you often have a period of calm and relative sideways movement. And I think that's really what we're looking at here. So before I go on, I want to mention just a few of the things that were popping up to me. First of all, there was an article that Huawei is going to be rolling out some new AI chips that could potentially compete with NVIDIA. There were some articles about Temu raising prices significantly on American consumer products because of tariffs. And then also the Dallas Federal Reserve basically did their their regional report, and they said we have higher prices and low production and low orders. The different Federal Reserve branches put out these regional indexes, and they've all shown a similar scenario of basically higher price pressures. They've shown weak production and weak orders, which is really a stagflationary environment when you put them all together. So it puts us in a spot here where the data kind of is pointing toward weaker economy, higher stagflationary pressure. We get that anecdotal evidence from Temu. And in some ways now, I mean, I am not an expert on shipping, but I'm seeing a lot of headlines from different people that essentially say we could start to see actual shortages in consumer products in the next 2 to 3 weeks. So, I mean, we're now in a spot where the effects of these tariffs are going to start to trickle through and do things like that. And that could overshadow earnings, or it could result in the White House backpedaling and reversing course. And then maybe that turns into something bullish. So we're in a really difficult environment to make any kind of real fundamental statements. And I think it's important to realize that. It's one of the reasons why we're kind of range bound here. So now let's look at the S&P 500, the weekly chart here on TradingView. And what's interesting to me is we have this. All right, so last week we had a big bullish outside week. We had talked on the webinar about holding 5100, and it did come along and emerge as a major support level. So now this 5100 zone is very important now. But I think the thing to remember is that at this point, I mean, that's have a very significant rally. And if we're in a spot where volatility, fades, testing back down to that kind of level might not happen. So the thing is, if we're in an environment now where where the glass starts to be half full, then at this point in time, we might not really get a test back down that candle. And in my view here, the kind of thing to be looking at is just chopping all throughout this range down around in many ways on the S&P 500. 5,400 is the next kind of logical level. It's the low from September. And you also have a level around here, like kind of 53.63, which was the closing high back on that big week when we had that huge rally when the first set of tariffs were removed. We have the low from back here the week before Easter, the 4-day week. So basically, there's all kinds of ranges in here where things can chop down and fill. And I think it's going to be that kind of market where short-term trading and short-term levels will be the things that actually make sense. And a lot of the patterns on the weekly charts, there's a lot of levels here that can pop up and have importance. And I think, any kind of, holds over long periods of times or anything like that could potentially become frustrating. One thing that is potentially sort of a negative today, I'm going to actually now go to this other chart, which is this is one of the things that we share on market trends. I did turn off the live data, but this was relatively recent. And so this is basically the S&P futures on the hourly. And you can see that there is a level here that we're kind of sitting at. It's at the top of the range. And if you look at this now, that was the futures. This is the cash index. So from my perspective here, there is a level around kind of 53.60 on the cash index that people might look for a test down this level. You can see over here, it's roughly where basically the price channel is coming up to. So sometimes these price channels can kind of come down and be filled. That's also where the 10-day moving averages. So from my perspective here, this is just a very kind of range bound sort of market. I've been kind of myself looking at things on short term sort of levels, like kind of 15-minute charts and stuff. And I think at this time, you have to just realize we're in a very much of a chopping sort of environment. However, some of the signals on the daily chart do give some positives. So this is a daily now, the S&P, and what do we see? The 10-day moving average is rising. We have what could be considered this bullish kind of triangle with the higher lows and this resistance level. So from my view here, this high is kind of relevant. Getting back above 5,500 is maybe not the most important thing. So from my perspective here, people might look for the market to essentially kind of hold here, and then we get to Wednesday to see what the earnings are, or maybe we get some other kind of news. And from my perspective, the level that people might be looking kind of in the near term for some kind of maybe intermediate low would be the Wednesday levels down under 5400 down to kind of 5470, 50, I'm sorry, 5370, 5360. In a bad case scenario, people might look for a test back down toward those levels, which are similar to the levels we were looking at on the hourly chart over here. This kind of level from back here on the 23rd. So that's what kind of pops up for me on this chart. Um, from my view, though, again, when you're in a range, we're kind of at the top of the range, and kind of feeling more bearish at the top of the range can be potentially something that makes more sense. Take things just the extremes of the ranges, and in many cases here we have a range, we're near the top of it. So unless something very significant comes out in the near term, there could simply be a lack of buyers and a kind of lack of bid for a day or two that could let us come down towards some support levels where then the buyers would rematerialize. So I think ranges like this often create those kinds of environments. So basically, from my view here, 54, down to this kind of you know, you could potentially look for something around 5,400, a potential test back down there. But I'm sorry, I'll go back on this chart. Um, Anywhere 5,400 kind of down to 5,370-ish, like I said, that is potentially the level that stands out as the most clear kind of support. Now that is the S&P. Now we're going to go to the Qs, and the Qs are also in a spot here where this level kind of 455 really is potentially the level that might kind of stand out. We have some highs along here. And so from my view, this is something where people might look for a test, essentially kind of from the highs of 2 weeks ago, the week before Easter, to this down into this box with a test down to 54.55, but potentially also, holding around 465, which was that high. So again, we just kind of have these sort of ranges where if something really bad comes out and we get pushed down, that can be a level where people look for support. Otherwise, if we hold above it, we could hold above it for a period of several days, like on the Qs. We could simply kind of hold in this range for a few days. The 10-day moving average catches up, and then people can look for some continuation to the upside. What's interesting about today, even though it's a red candle, it's a higher high and a higher low. So this is a kind of positive digestive sort of price action here. Now the Dow, well, I'm sorry, let's look at the Dow on the weekly chart. Mostly we use weekly charts for this, but I'll tell you, in this kind of market, you have to look at more charts. There's more levels that can come out of nowhere. So from my perspective here, this is one that's interesting because it did not get back above these levels. So in many ways, the Dow continues to be kind of one of the weaker areas here. The value is not as positive. We have seen a return recently. Let's look back over on this on my state of the market. When we look at our key ETFs, for example, something like a 5-day return, you can see XLK, XLY, XLC. Let's look on the 10-day. In many ways, XLK, XLY, XLC are outperforming. So the key thing is we've started to see this return to the mega cap growth themes. XLK, XLY, XLC. Those are the mega cap growth themes. So in that environment, it makes sense that the Dow would be struggling more. We are more now in a kind of environment that's returning to the growth theme, the kind of large cap growth area. And that is a net positive overall for the market. When you see value outperforming or things like REITs and consumer staples outperforming, that tends to be bearish for the market. So there are things in the internals now that are pointing more in that positive direction. Now the Russell remains very much kind of damaged here. And it's interesting to see how it got stuck. It was not even able to really get much above this level from last week. So I'm also looking at the Russell here, and from my perspective, this people might see some opportunity for this to fill back down into this space with large cap growth and everything else coming. It is an area that may not have as much sort of traction this week. So I think right now this is an area where people might look for some deeper kind of tests back down and filling back into this big candle, another bullish outside week, but there's a lot of potential space down, and we're stalling, and we've basically stalled at the high from last week. So from my perspective, we're looking at something like the Russell. The Russell might be something where long term it has been a laggard, and people might look for it to remain a laggard. You can see these levels over here where it continues to struggle from like last spring. So I want to kind of point that out on the Russell. Now, the 10-year, in many ways, the most positive thing you can say about the stock market right now is that the 10-year yield is not continuing higher. So in many ways, it looks like Bessent might have really kind of put a big band-aid on this thing for now. And I think we're in an environment here where we are no longer seeing this kind of major crisis of kind of the sell America sort of trade that we saw for a period there. This idea of there being potential capital flight out of the United States, that is in many ways kind of now no longer manifesting in the price action. We're no longer seeing treasury yields move higher and the dollar move lower and the S&P move lower. And that is actually another positive when we look at the internals of the price action. So we're seeing large cap growth outperforming. We're not seeing this kind of monetary macro, America capital flight thing happening as much now. So that's also a kind of positive. So from my perspective here, this is something where, there is the potential for yields to basically stabilize and inch lower. One of the reasons why, a lot of people were so positive was because, there's a strong reason to believe that inflation will decline this year. Now you have the tariff pressures, but you have the potential of significant declines in shelter costs, which is such a big part of the index for inflation. And if you look out into the future, that might be coming back into play. So at this point in time, I wanted to kind of point this out that we are not really seeing a lot more of this kind of risk of this exploding to the upside. From my view here now, the 10-year yield is just kind of neutral sideways. It's not continuing that trend to the upside, and that is an overall positive risk appetite. It's behaving more like the textbook says it should, which is that in a recessionary environment or people being scared about the economy, yields go down. And if that continues to happen, that is kind of like what should be happening. And it's not as much of a sign of kind of dysfunction as we had before. All right, now materials here are stalling at a nice sort of level XLB, and from my perspective here, this is something where if you are in a kind of recessionary environment, this is now setting up for an area at this kind of 83 level with the potential for a test back down towards 75. So I want to point that out on XLB. Now communications are also, you know, these have remained overall one of the stronger sectors, and it's interesting to see you know, it's kind of at this resistance level here. And I mean, I don't see any immediate sort of, as I look at this from my perspective, this is something that's going to basically hinge on Meta reporting earnings later this week. So I think we have to realize this is at a potential resistance. If Meta is strong, people might look for a breakout to the upside. If Meta isn't strong, then we're looking back down. So I think this in many ways is very much going to hinge on those earnings from Meta. Now, energy is increasingly interesting to me on the downside because OPEC had a lot of bad news last week. And if you look energy here, the XLE is stalling under 83, that level from back in September and December. So I'm increasingly kind of looking for some potential downside in energy. I would, I think that this is interesting to see this shaded zone through here is kind of like the weekly close in early April and then two weekly lows. But from my perspective here, I think the XLE people might look for something between 78 and a half and 83, and let's see if we potentially get a drop back down. I'm trying to kind of look at this to see if we do get some opportunities in here. We do have energy earnings later in the week. I'm pretty sure we have Chevron and Exxon at the end of the week. You might want to look over at the earnings calendar and see that. But you have those as potential catalysts, and you have the oil data on Wednesday. But there was that report last week from Reuters that OPEC wants to increase production, and Reuters has historically been pretty accurate on a lot of these energy stories. Now, for me, XLF is pretty interesting, and what's interesting about XLF is this has reclaimed the lows from January. Look at the S&P. The S&P has not reclaimed its lows from January. Most of these other sectors here, for example, XLK, technology has not reclaimed its lows from January, which are right here. So XLF remains extremely interesting because basically it has come back above its lows from January when, from what I can tell, most of the rest of the market has not. So I think financials continue to kind of emerge as a new leadership area in the market. So I think we kind of have to, that's something we need to be aware of and kind of, thinking about as time moves on and as we move deeper into 2025. This might be an area that shows greater leadership. Let's look back over on TradeStation really quickly out of curiosity. Year to date, what do we see? Well, XLF is actually not outperforming. We see the safe havens outperforming, but it would be, well, it is outperforming, but it's red on the year. So it is kind of interesting. Of all the kind of risk on sectors, XLF is the best performer year to date. So that's kind of interesting. But I think the key thing here is that we're above that level. And you can also see here that we do have something of a downtrend kind of forming. And, last week at one point, we were talking about the potential downtrend. This is XLF, and you can see on this chart, we basically have this kind of falling trend line, and that might be something people look for a breakout. I was looking at things like Morgan Stanley and things, and these guys all have these interesting sort of trend lines that they're trying to kind of break above. I mean, depending on how exactly you draw it. But I think it's interesting. JP Morgan had a falling trend line, and then it broke it, and then now it's consolidating above it. So this is interesting to continue to see financials here kind of stepping up and showing leadership. So XLF above the January low is standing out to me. XLK on the, I'm sorry, let's go to XLI next. Now, XLI on the other hand, this point, I'd say all kinds of global trade risk with these things. There's just so much evidence now. There was more articles about weak demand for air traffic and for airlines, and there's industrials are, they include transportation stocks. Most of transportation stocks are in the XLI. Caterpillar and Boeing. These are now companies that have all kinds of geopolitical, like Chinese trade risk. And the overall sector at a point when the economy looks weaker and the 10-year treasury yield is moving lower on economic fears, this sector overall is something that has that cyclical aspect to it, and it's stalling in this low from March. So from my perspective here, this is one where people might be thinking this is near its high for now and be looking for some tests back deeper down toward this, back down toward 120 really on the XLI. XLK, the technology ETF. I think it's interesting to see this low across here from this early part of March. This is a level around 206.29. It was the low back in the first, in the week begun March 10th, and then it was a low again 2 weeks later. And we run above it last week, and we're kind of sitting here. So now the question is, do we get sideways movement with continuation, and does this become a new high? Again, it's going to hinge on a lot of the earnings we have later this week, in particular, Microsoft on Wednesday and Apple on Thursday. I mean, I still kind of go back to the fact that, to me, the technicals here are we have to be careful putting too much stock in them, because you could have something come out of the White House that could just completely blow away the technicals. Technicals are good when the market mostly knows the things that are happening and we can assess things like trends. But, if, say, for example, the Supreme Court was to come down and, rule these tariffs are unconstitutional or illegal or something like that, or block some of them, I mean, the impact of something like that is impossible to know. We don't know what they would say, or they might say the tariffs are fine, we're not going to block them. And so I think overall, the markets deal, and technical analysis deals, and price action deals with essentially known things, and then kind of pricing in movement based on things that people all know, or people are knowing incrementally. Like, you might have a company that's getting better news happening on it, and the stock starts performing better. That's from incremental news coming out, becoming priced in. The problem with the environment we're in now is that you could get kind of massive binary news get priced in a few seconds, and that's not really the kind of environment where technical analysis is helpful, which is really why I'm focusing on some very kind of just short-term intraday sort of levels myself. All right, now that's XLK. XLP, from my perspective here, this is totally neutral. The thing that's interesting at XLP here is, as we're seeing the leadership shift to the big three of technology, communications, and consumer discretionary, essentially this is now an area that historically underperforms when those growth risk-on sectors are doing well. So from my view here, people might be simply looking for the XLP to drop back down towards 76 and just say, you know what, let's embrace this range. Let's think about entering at the bottom and exiting at the top, and just recognize we're in a range. It's not really trending. This could be in a range potentially for a while. And that's all there is to it. Now, real estate investment trusts are interesting, but they have remained in this kind of downward trend. And from my perspective, this is pretty much the weakest sector in the market. And I mean, there are some things about them that are positive, but I think there's also a huge amount of evidence that, we kind of have a train wreck happening now, potentially in the housing market, with prices continuing to fall. There's a lot of evidence that we're going to see a lot of drops in home prices, going forward. So, I mean, that might be something also, that even though real estate investment trusts are different assets than, single family homes and home builders, they are related to a certain extent. So I think we have to, at this point in time, realize that this is a sector that has really lagged the broader market. It's nowhere near back its old near to its old highs, unlike every other sector. So this has remained a weak area overall in the market. And I mean, if any level does kind of stand out to me on this one, that would be interesting, would be right around this kind of, I mean, potentially around 4140-ish. The kind of, you can see it had several closes in this area, several weekly closes kind of across here, and closing across there, and now we're kind of stalling below it. So from my perspective, this does continue to show price action that's probably um, less optimistic, less positive. XLU is the next one, utilities. Now this is interesting because here we had basically a breakout to new highs, and then pullback, but we did hit a new all-time high back in November. And if yields move lower, I mean, we've had this downward trend, but what's interesting is that we are looking like we're getting ready to escape this. So from my perspective here, if we enter a period when people say, oh, we're going to have a weak economy, but we're going to have rate cuts, the whole utility thing and the whole AI data center thing, that could come back into play. So I want to just kind of point that out. I think we have to realize is that there is, this theme of utilities, this could come back to life as a potential kind of overall theme. So let's kind of not forget about that. And I would say, if anything, people might want to be thinking about setting some price alerts up around 80, 80 and a half on XLU. Healthcare XLV. Now, this is one where it has had all kinds of strange kind of risks. There's tariffs maybe on pharmaceuticals. There's all this news, potentially cuts to Medicaid. From my perspective, also, this is one that has all kinds of uncertainty priced in. But from my view here, when you look at this, the lower high, the lower low, people might still be looking for a test back down toward those levels from October of 2023, down under 123 on XLV. XLY, this is the consumer discretionary. It's also interesting to see that this one now is also kind of holding above its lows from March. So this is an area now. Amazon earnings are coming out, and that is likely to be the major catalyst now for XLY. If you look at it on the daily chart, also here, um, from my perspective, this is something where we kind of see just a lot of space with the potential resistance up around kind of like 205. So from my view here, this might be something where if Amazon has a good earnings report, you might get a gap up to 206 or some kind of jump to 206, and that might be where people are more interested in selling. So that's what we have on XLY. So it's great to talk to everyone. And overall, I think we have to remember, like I said, that this is an environment where there is so much uncertainty. But like we said last week on state of the market, I mean, on market trends, the key things that are out there is the fact that there is an overall expectation that tariffs are going to be diminished in various ways. There is an expectation of some ways that Scott Bessent and the Republicans are going to move towards some kind of tax cuts. There is some kind of expectation in different ways that that the Fed, at this point is potentially still on track for a rate cut in June. So those are things right now that when you kind of take a step back, those are potentially bigger, longer term positives. And I think those remain in play. And the market at this point might be in a spot when it's willing to give the benefit of the doubt for now and wait to see if those things do pan out again, and to see, we kind of work our way along this, kind of 5,500 for a while. It might be a period of time as we wait for that news to really kind of, mature and be confirmed. We might get earnings, we might get other announcements. So from now, I think that the price action we're seeing is a higher low, sideways consolidation as we wait for the news to become more clear. So we will be back with with market trends on Thursday. The last thing I'll just remind you guys of, and if you go back and watch market trends, is we did talk about this advanced decline line sort of thrust of breadth that came through recently, and that is also something that would favor the short-term bullishness. Which also means that lower volatility, which might simply mean there's smaller movements, but there's not necessarily selling pressure. So hope everyone has a great day. We'll be back with you on Thursday. Take care.